something shiny. Next position I want to give you is BlackRock Capital Investment Corporation. Stock price is plus or minus $6.70. The something shiny that they're offering is a 10.8% dividend. Now, BlackRock Capital Investment Corporation, okay, which trades under the symbol BKCC, is a business development company. It's a BDC that provides middle market companies with various avenues of financing, including senior and junior secured debt. That compiles up roughly 60% of their portfolio. They also engage in subordinate unsecured debt at 16% of the portfolio. Now, BKCC's typical investment will be anywhere between $10 million and $50 million, and it will invest across a wide variety of industries. Finance equals 26% of their portfolio. And it is the biggest slice of the pie, but it also holds companies in chemicals and energy and business services and environmental industries, amongst others. Now, BlackRock Capital shares a name and relations with investment management giant BlackRock. Okay, but that's about it. It certainly doesn't share its success, the success of BlackRock. You see, BKCC, the business development arm, has been in a steady decline since 2013, including a 4% drop in 2017 and a red-hot broader market. Things haven't looked well for BKCC, like I said, since 2013. You see, the company struggles are illustrated by its third quarter earnings, which included a 4.4% sequential drop in net asset value, as well as net investment income of just 17 cents per share, a penny shy of its quarterly distribution. Now, that was affected by interest from outstanding convertible notes, as well as markdowns in legacy investments. Now, as part of a broader half-decade downward trend that has forced BKCC hand into not one, but two dividend cuts, including one enacted at the beginning of this year. And in fact, the same time BlackRock Capital paid out this little, it was recovering from the 2007-2009 financial crisis and bear market. Now, with few signs of improvement to point out, BKCC's dividend seems much more likely to stagnate or shrink than bounce back. We need to monetize the herd as they go for the shiny 10.8% dividend that BlackRock Capital Investment Corp offers. ASK the WIZ Wealth Institute Dividend Option Trifecta Effect Strategy. Third position I want to give you is Frontier Communications. Frontier Communications, listen to me. The price of Frontier Communications hovers around $7 a share. But Frontier Communications is also paying a dividend of 34.5%. That's no misstatement. 34.5%. Frontier Communication is indeed a beleaguered telecom. Now, what's even more comical than this 34.5% dividend that it's paying out is that its 60-cent payout represents a whopping 62% cut delivered earlier this year in their dividend payout. A little fun with the math, shall we? If Frontier is paying its previous $1.58 out at today's prices, it would be yielding more than 90% in dividend payout. Sadly, this entertainment dividend train wreck has to end sooner than later. And people are still clamoring. They're not looking at the fundamentals. They're still clamoring and buying Frontier Communications. We need to monetize this, family. Dividend option trifecta effect strategy as people go for something shiny. Now, while Frontier has long been troubled, the start of the current avalanche that is going on can be traced back to 2015 when it spent $10.54 billion on wireline, broadband, and other assets from Verizon to bolster its business. And since then, however, service delays and angry customers have become the norm, and actual performance has come far shy of the growth that Frontier projected at the time of the acquisition. And meanwhile, its debt has exploded to $17.6 billion, more than 5 times its current equity. Now, Frontier cut its dividend earlier this year to preserve cash, but given the company's operational forecast, it is very, very clear, I dare say it's abundantly clear, that the company needs plenty to go right to continue tackling debt that's maturing over the next couple of years. And when worse, this company has a massive $5.26 billion in bonds that are coming due in 2022 that it will have to refinance. And that's going to be a difficult task if it's still hemorrhaging cash to keep income investors happy.